This is going to be the LSPD Academy's beginners course Forex Intro video. My name is Kevon, CEO, founder of LSPD Academy, as probably most of you know. And since this is a heavily requested video, we're just going to break down a few things, and a lot of these things will be broken down further in the beginners course or the basic course. But right now we're going to do a Forex overview, just introducing what the Forex market is, how do you trade it, how do you make money, who plays a part in it, and just kind of get you accustomed to this market space that is honestly life changing. So with that, we'll go ahead and get into this. Let's see. Oh, probably should click on it. Oh, too far. So number one question: what is Forex? So Forex is actually short for the foreign exchange, right? So it's the foreign exchange market, and essentially what it is the global financial market that allows a person to trade currencies. One big part is that a lot of people don't understand that they actually play a part in this Forex market when traveling. So let's just say if you're leaving United States and you're going to Mexico, and you exchange at the airport your US dollars for Mexican pesos, you now just participated in the foreign exchange market and you didn't even know it, right? So essentially what we're doing is the same thing, except for we're doing it on our phones, in our living room, couches, bed, pajamas, you know what I'm saying? Real leisurely like, okay? And basically what we're doing is we're making an educated, that is the key terminology here. I feel like a lot of people miss that part. We're making an educated speculation on the difference in the exchange rate between two currencies, and we're buying and selling based off our analysis, right? So based off the things that we look at, market structure, technical fundamentals, we put all these things together and we see like, okay, I think this currency would be worth more than this currency, so we're going to buy this currency, right? So let's dig a little deeper. So a little more on the Forex market. So compared to the measly New York Stock Exchange, which is one of the most heavily traded stock exchanges, or the heavily traded stock exchange in the world, trades at about $22.4 billion a day in volume, right? On the New York Stock Exchange. The foreign exchange market trades at about 6.6 trillion with a T, big T's, in day trading volume. And essentially a lot of this volume is made up of the normal people traveling back and forth, different countries buy different currencies. For example, the United States dollar is one of the most heavily vaulted currencies in the world. So pretty much every country or major countries has a vault just filled with US money, right? We're a superpower. That's kind of what comes along with being a superpower and being a global economic power. Um, so Forex market is open 24 hours a day, 5 days a week, Monday through Friday. It technically opens Sunday at 4:30, 5 o'clock, 4:30, my time, Central. And with most brokers, you can actually trade cryptos 24 hours a day, 7 days a week. So essentially you're able to trade nonstop. You can trade every single day. Monday through Friday, you can trade the typical Forex pairs and things like that. And on the weekends, a lot of people trade cryptocurrencies like myself. I am a big weekend cryptocurrency trader. Um, so the Forex market operates in about 4 sessions, and excuse me, about operation about 4 sessions. So you have the Sydney, the Tokyo, the London, and New York, with the London and New York session being the most heavily traded sessions in the Forex market, right? And when these sessions are kind of depends on where you're located in the world. And I actually have a chart later on down in the presentation on session times, so that'll be useful. So who trades in the Forex market, right? So at the top of the list, you got super banks, right? So Citi, JP Morgan, Wells Fargo, all the big banks of the world. This is how they gain their money. This is how they gain their capital. You put $100 in the savings, they take your $100 out your savings. They're going to still show you $100 in savings, but they're going to take that money, they're going to reinvest it into stocks, foreign exchange, cryptocurrencies, make tons of profit and give you like 0.1%, 2%, nothing on your dollar pretty much, right? They're going to make $100,000 or $1,000 for your dollar and give you a dollar. Electronic brokering services, right? So the brokerages that trade within the market, boom. And then you have your medium and small banks, which is your local banks or Bank of America, Community America. I consider those more medium, small time banks. You have retail market makers, hedge fund and commercial companies. So you have a lot of commercial companies that trade. Big hedge fund managers, they love trading the cryptos and the foreign exchange market, as well as retail market makers. And then we have retail traders, which is me and you. So we're at the bottom of the list, bottom of the barrel. But hey, that's fine. You know, we do what we do. So a lot of people are asking, so how do I make money in this market? So quite simply put, how you make money in the forex market is based off the difference in price where you bought or sold and the lot size used. So there's 3 categories of lot sizes: mini, micro, and standard. At the end of the presentation, there's actually a lot size breakdown, but for right now, mini, micro, standard, right? It's different lot sizes. So let's just say you see a price quote for GPD USD, which is the Great Britain pound versus US dollar, and its exchange rate is about 1.14000. So what this is saying is for every 1 pound is $1.40 US dollars. So let's just say you buy in at this price at 1.14000 with a mini lot size, right? So a mini lot size is going to be, or a mini lot size of 0.10, which is going to be $1 per pip. So for each pip that it moves, you get $1. And we'll go over pips a little bit. So let's just say the price moves up from 1.14000 to 1.14200, right? So price has now moved up 20 pips. And so with that lot size that you placed at 0.01, you now just made $20 in the foreign exchange market, right? But those same 20 pips could also bring you in $1,800 or even a small of amount as $2, right? So that kind of gives you a kind of scope of how the range of lot sizes can go. So what is a pip? So you probably heard of the terminology pips, points, pipettes, and lot sizes thrown around a lot, especially if you know any Forex traders. So quite simply, a pip is the unit of measurement to show change in 2 currencies. So as you see, when GU went up, the pips went up, right? So the second to last digit is usually the pip, and the last digit on a price quote is usually a pipette, which is a fractional, 1/10 fractional of a pip. So 10 pipettes make up 1 pip. You don't really have to put too much emphasis or focus on pipettes. You mainly want to focus on your pip count, right? And your pip count is more important than the dollars you make on the trade, because your dollars you make on the trade we already talked about, can range a lot. So as long as you're focusing on getting those nice pips and collecting a nice pip count on a daily, you'll always be golden. So let's do another example of a pip. So if Euro USD moves from 1.22000 to 1.22250, it just moves 20 pips, right? 25 pips, right? So let's just say you bought into price at 1.2000 with a lot size of 0.5. So this lot size is going to be $5 a pip. So now you're making $5 a pip and you just caught 25 pips. So now you just made $125, right? Now we see at first what 20 pips was giving us 4.1. Now we're seeing 4.5. We have a lot more, you know what I'm saying, profit off these same trades with the same relative amount of pip count. So a pipette example, let's just say Euro USD moves from 1.22000 to 1.22001. It just moved 1 pipette, right? So there you go. So if all your technical indicators show that Euro USD is heading up, you're going to want to buy Euro, right? But if the European economy wants to weaken its own currency, and yes, that is definitely a thing, Euro USD is going to go down. No matter what your technical indicators or fundamental indicators say, if Euro wants to weaken its currency, it can do that. It has the power to do that. And that's why one of the first things we practice is good risk management, right? So we always want to protect our investments. So, and of course, we'll go over risk management later on, of course, but risk management, most important thing when it comes to trading. Another example, let's just say you have Great Britain, right? GPD versus USD. If the Great Britain economy and currency is going to rise in comparison to US currency, you're going to want to buy into GPD USD. If you think the opposite, so if you think the United States economy will rise and this currency will rise at a higher rate than the Great Britain pounds currency, you're going to want to sell GPD USD. And I know a lot of people always say, so pretty much you're just gambling. There's a big difference between gambling and day trading. One of the biggest differences is educated speculation, right? But let's go into gambling and day trading, right? So gambling is like playing dice. You roll the dice, throw them out there. You don't know the number that's going to come from that. When you're trading in these markets, like the stock market or the foreign exchange market in particular, you have many, many indicators that's going to show you where price is going. So the main indicators you're going to have is going to be your technical analysis, right? Which is your charts. You're on the charts, right? So you're marking up the candlestick patterns, the chart patterns, the trading tools, the indicators, things like this to help you have a better understanding of where price is and where price is going. And then you have your fundamental analysis, like your macroeconomics, your news, monetary policy, interest rate, unemployment, wages, things like that that build up. What is the economy as a whole doing? How is the economy as a whole functioning, right? Because we're trading a lot off how this economy is doing. Because how economy is doing is going to base how currency is doing, right? So one prime example we seen over 2020 when the pandemic hit, a lot of currencies took a very dramatic dip because production in their economy was either halted or reduced significantly, right? So we've seen the US dollar tanking, German, not German, but the Great Britain pound took a very big loss, right? A lot of these currencies decreased in value because their economies decreased in value. Their economies weren't producing at the same rate that they were producing in 2019, 2018, right? So you take a lot of these factors into the equation when you're looking at these markets, looking at these charts, and before you execute a trade. So the different parts of Forex, right? So within the Forex market, you can trade hundreds of different currency pairs, right? So one currency versus another. But on top of the ability to trade currencies, you can also trade cryptocurrencies like Bitcoin, Ethereum, depending on your broker. Now, this does depend on your broker, but most brokers do allow you to trade cryptocurrencies and commodities like gold, oil, silver, and even indices like the SPF 500, NASDAQ 100, and even the UK 100, right? So you have a very broad range of things that you can trade within this market. And that's what makes this market so appetizing for especially young people. It's like, I don't have to go anywhere and I can make money on my phone. You know, I can build a digital business off of my phone. I can generate an income, a second income, or a primary source of income, and I never have to leave my room. I never have to leave my house. And this, I feel like, became a lot more potent in 2020 when nobody could leave their house, right? So some of the major currency pairs include Great Britain pound versus US dollar, the US dollar versus the Swiss, US dollar versus Japanese yen, the Aussie dollar versus US dollar, New Zealand dollar versus US dollar, and US dollar versus Canadian dollar, right? So all of these are your major currency pairs. So you have USD, CHF, Aussie dollar, Great Britain pound, and we're also missing Euro USD. My bad. I just noticed that. But all of these are your major currency pairs that you are allowed to trade in. You also have different branches, like exotics and crosses, that you can get into. I like to keep it simple. Session times. So since we have daylight savings, since that's the thing, the session times range from daylight savings and outside of daylight savings. So let's just say spring, summer, right now, these are the times that we have these sessions open. So we have the Sydney, Tokyo, London, New York, with the London opening up 3 a.m. Eastern, closing at 11 a.m. Eastern, and New York opening up at 8 a.m. and closing at 5 p.m. So the London, New York session are the most heavily traded sessions and have the most volume. So typically you will see on most, um, especially USD pairs, anything like that, anything involved with the US dollar is going to have a lot more fluctuation when it comes to the New York session. And a lot of the Europeans pairs are going to have some great fluctuation in the London. And London, New York actually overlap for a couple hours. And at that time, you see a lot of good volume being traded. And then you have your fall and winter hours. So October, November through about March and April. Session changes again for daylight savings and recognition of daylight savings. So those times are as follows. EDT is your Eastern Standard Time. So depending on where you are in the United States, you would base that off the time zone difference. And GMT is like the global something. I don't focus on it, not gonna lie. So if you live in the United States at the time of this recording, which is like July or June 16th, and you live Central Standard Time. I live in the Midwest, so I live Central Standard Time. These are your time zones right here. Don't even have to do the math. Look it up. Boom, right there. So reading the pips or reading a price quote, I guess you could say. So as we talked about, your last number is going to be your pips, right? So each number, this goes up, add pips. This is a micro pip. So once this gets to 9, it'll change this to a 6 and it'll reset back at 0 and redo its count. But you can see pipettes, single digit pips, double digit pips, triple digit pips, 1,000 pips, 10,000 pips. There's that information for you. Lot sizes, right? So here are your lot sizes. So I cut off a few from like 5 to 9. I just didn't do. But here's a breakdown of your lot sizes. So micro lot sizes are going to be like 10 cents a pip, 20 cents a pip, 30 cents a pip. And here's just a different fluctuation you can see. In these same 20 pips, you can either make $2, you can make up to $1,800, right? Referring back to that example I was talking about earlier. And we see with 60 pips, you can make $6 up to $5,000. These are the same pips, right? And of course, you can't just get in the market like, oh yeah, I'm about to play standards. Don't do that. You're going to blow your account and you're going to have a miserable time in this market, right? So you want to grow. You want to start at a lot size that is good for your account, and you want to grow that until you're able to trade those bigger lot sizes. But with that, that's this Forex basics or Forex intro. Not gonna dig too deep and down a rabbit hole into everything. That'll be later on in the courses. But we do have that information provided for you guys. So thank you for coming and watching the video, and hope to see you more.